And basically the difference between these two particular events is that when talk about non-adjusting event, these are those particular events which will need not to be adjusted to the financial statement which have already been what, prepared. In fact, that's why we have the name non-adjusting. Once now these particular events occur, one, they do not provide additional evidence about the conditions which were existing before the balance sheet date, and therefore they will need not to be adjusted to the financial statement which were prepared. So therefore we say that these are events which do not provide additional evidence which do not provide additional evidence about which do not provide additional evidence about the conditions which were existing before the balance sheet date, and therefore need not to be adjusted, in the financial statements, which were prepared at the balance sheet date, date. So we have a balance sheet which were prepared at the balance sheet date. But this particular event here, once now they take place, basically what you have said is that they will need not to be adjusted in the financial statement which were prepared, but they will need to be disclosed as part of the note. So mean that if at all now they are material or basically they are actually significant, they will always need to be included as part of the note now which will be accompanying the financial statement. So therefore we can say this event must be disclosed as part of the notes, or basically we can talk of part of the footnotes, which accompany the company's financial statements, statement. So therefore, that is the difference between those particular two events, that is adjusting event and non-adjusting event. Basically, you have said that adjusting event are those particular events which provide additional evidence about now the conditions which were existing before the balance sheet date. And a good example of this particular event is whereby maybe one of the debtor who owed the company a certain amount of money is declared bankrupt after the year has come to an end. Now, that particular event needs now to be adjusted in the financial statements which were already prepared. But that will only happen if at all now those particular events involve now a significant amount. Because if at all they do not involve significant amount, then in this case they can just be ignored. But on the other hand, when we talk about now the non-adjusting event, these are those particular events which do not provide additional evidence about now the conditions which were existing before the balance sheet date. And therefore, you have seen that as a result of that, those particular events need not to be adjusted. So they just need to be disclosed as part of the notes, which now will be accompanying the financial statement. And a good example of this particular event here, that is the non-adjusting event, is whereby, for example, the company decided to do a merger, decide to do an acquisition, but once now the year has come to an end. Another good example of that is whereby the company decide to pay dividends once now the financial year has come to an end, or maybe we have a scenario whereby the company decide to sell or maybe to acquire some asset once now the year has come to an end. Now, all those are good examples of non-adjusting event, and basically what you have seen is that once now those events take place, because they do not provide additional evidence about the conditions which were existing before the balance sheet date, they need not to be what? To be adjusted. They just need to be disclosed as part of the footnote which now accompany the audited financial statement for them now to be brought now to the attention of the shareholder. So that is the difference between those two events as defined by IAS 10.